Hi there, good afternoon. You've tuned into ET now, and this is Market Fatatfat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you as well, Vinny. And if you look at the markets, we are just trying to hold on and stay put where we are. No doubt we drifted much lower, saw some sort of a recovery, but now if you look at the markets, they are actually trading flat. While the Nifty is trading flat with a negative bias, you have Sensex that's trading flat with a positive bias. A lot of focus coming in on key counters which have come out with their earnings. Remember that you had SBI, ITC, that those earnings came yesterday during market hours, yes, but there was some sort of a repercussion in today's trading session as well on those particular counters. You also have to take a look at what Tata Elxsi is doing, Grow Capital, as well as for the matter of fact, take a look at what even you have Gland Pharma doing in today's trading session. Remember, Gland Pharma is the one that's slumping in trade today. There you go, it's locked in the lower circuit about 20%. But there are a lot of stocks that we are going to talk about through the course of the next 1 hour, isn't it, Vinny?
Absolutely, and some of the names which you mentioned also will be making a part of that list as well. On that note, let's get started with all those stocks that are buzzing in trade either on the back of news flows or technicals. On the technicals, we have Gaurav Bissa joining in with us, while from the research team, we have Harsh as well as Lisa joining in with us. So very good afternoon to all three of you all, and I'm going to be starting with the first stock that we're going to talk about coming in from the retail footwear space. That is Bata India. They reported their numbers. When you look at the numbers that have come in from the company, we're seeing a decent growth in terms of a revenue, 17% growth on a year-on-year basis, coming in at 780 crores. Slight bit of a miss in terms of the estimates there for the revenues, but the operating performance was quite strong, much better than what the street was expecting. EBITDA grew by 11%, while in terms of the margins also, that saw a slight bit of a decline, 130 basis points, but the street was expecting a bit more of a sharper decline there. So yes, in terms of the operating performance was slightly better than in terms of what the street was expecting as well. Other than that, let's just look at the expenses, other expenses. That is something that actually weighed overall on the margins of the company. But all in all, today we're seeing the stock price was buzzing in trade, given up all those morning gains as of now, still holding on to gains of around 0.5% in trade share.
Alright, next one, let's talk about CMS Info Systems. And why is this particular counter in focus? Because they have informed the exchanges they will be beginning to manufacture ATMs at a new plant in Chennai. No doubt the stock is under pressure in today's trading session. However, the company said that they will commence production and manufacturing of banking automation products at their new plant in number 2 in Chennai. They said the move is aimed at offering integrated banking automation solutions to their clients. The company will produce automated teller machines, cash recycler machines, as well as self-service kiosk. This is what the company mentioned in their press release. They've also said that they're planning to source components from local certified suppliers in India and the automated teller machine modules from its partner in Korea. But however, post that information, you saw the stock see a spike right at the open because this news came just before the market opened. But from there on, giving up all of its gain, trading lower by about 1.5% as we speak.
Okay, let's move on and talk about Gaurav's first stock, that is NIIT. Gaurav, what should we expect in terms of charts for this one? 52-week high was at around 498. Should we expect those levels coming up in the next couple of months?
Well, it is possible that stock has formed a rounding bottom pattern on weekly charts. We are seeing on the verge of a breakout. So yes, there's a possibility we can see a very strong and robust upside going forward. The stock is trading above the major moving averages on a short-term charts. So in all, in general, things are looking quite interesting, and a very strong upside from the current levels cannot be ruled out.
Alright, so that's the take coming in on NIIT. But Lisa, let's talk about Minda, and this one also is reacting on back of its earnings.
Yes, it's reacting negatively, and that is because of weak set of numbers on the quarterly front. On year-on-year basis, the net profit was up 20% and the company crossed 11,000 crore for the first mark. But if we look at the sequential numbers, it was a dampener on that front because the revenue was flat and stood at around 2,889 crore. Even the margin that it contracted at 11% versus 12% last quarter. Now, what ICICI Securities is saying that the margin performance, that was a surprise, negative surprise for them, and but the long-term opportunity that is driven by regulatory norms such as the seatbelt reminder as well as mandatory airbags, which Minda has a good presence in. They also see continued focus on increasing the content per vehicle with increasing traction in the EV. And the management also highlighted that with the ongoing R&D as well as capacity expansion and strategic expansion plan, they will be increasing the wallet share from the existing as well as the new customers. So that was Uno Minda for you, negatively reacting to the weak results.
Okay, let's move on and talk about another earnings candidate. And Harsh, you picked out Tata Elxsi for us. How is the number looking like for this one? What is the stock price to it?
Well, yes, Vinny, largely inline set coming in from Tata Elxsi. In fact, the stock price was down in early trade but has since recovered quite well. And let's look at the numbers first. Healthy uptake with regard to revenue, 2.5% higher on a sequential basis. We're also seeing EBIT rise by around 2% or thereabouts. Slight margin contraction coming through on the back of that. 27.5% was the margin number, or rather margin number in Q3 of FY23. It's come in at 27.3%, down around 20 bips or thereabouts. We're seeing PAT therefore expand 4% on a sequential basis. PAT is coming at 202 crore versus the 195 crore number same time last quarter. Again, as I did mention, largely inline set. The stock in fact fell quite sharply, around 4% odd in early trade before recovering. Now sitting at the day's high.
All right, let's move on then and let's talk about Chalet Hotels. It's Friday, given the fact that every weekend looks like all the hotels in
You have just had a Friday and a nice holiday, Cheryl. We haven't, so we would be loving to go and do that booking over there. But for you, that booking is already done there, right, Cheryl?
Yes, and in fact, it's been overpacked, I must say. But how are the charts looking, Gaurav? Does that also indicate a positiveness, a bullishness on this particular chart?
Yes, many of the hotel stores are seeing fresh breakouts. We have seen Indian hotel inching higher on week basis, and Chalet has given a fresh breakout on weekly charts. Volume participation is quite interesting, and we are seeing some outperformance in the hotel space as well. So, in my opinion, the stock can see another 10% upside from here. Probably a stop loss of around 400, 405 can be kept and play for targets of 10%. It's one of the strong contenders, and we can see Chalet outperforming among the hotel space as well.
Okay, let's move on and talk about PI Industries on the the back of its numbers. And when you look at the numbers coming in for the company, not a bad set of numbers there. Revenue seeing a growth of almost 13%, coming in at 1,565 crores. Also, in terms of the margins and the operating performance of the company, we've seen a clear improvement in that front as well. 344 crores is what the EBITDA came in at, versus the margins, which came in at around 21.98% versus last year it was 21.91%. So almost flattish on a year-on-year basis, nothing bad over there as well. And in terms of the bottom line, strong healthy growth there as well of around 38%. So all in all, a decent set of numbers has come in from the company. Stock has given up those morning gains, but still trading around 0.3% as of with a positive bias.
All right, moving on then. Gaurav, let's talk about Birlasoft and how the chart's looking for this particular counter.
I think mid-cap IT space has been buzzing for a while now, and we have seen many of the stocks witnessing significant upside. Birlasoft, after announcing quarterly numbers, witnessed a very robust upside. It's giving a breakout from what we call as a double bottom pattern formation, and a weekly close above 330 would propel it towards the level of 365, 370. I think even at the current juncture, one can keep a stop loss of 315, buy it for target of 365 that we can see next couple of weeks.
Alright, so that's the take coming in on Birlasoft. Let's move on and let's talk about Rama Phosphates, and why is that particular counter in focus, and no points for guessing. The fact that it is reacting on back of its earnings. The stock has fallen as much as 9% last time I checked. Now seeing a tad bit of recovery from that particular level, but at 9% the stock logged its biggest intraday percentage loss since November 4th. The company posted a 40% or approximately 40% dip in their profits for the quarter gone by. That came in at around 3.56 crore rupees at this, because the expenses surged by approximately 17.3%. So on back of that, you can see the stock plunging in today's trading session, down now over 7%.
Let's move on and talk about Max Healthcare on the charts then, Gaurav. How are you looking at the charts for this one? What is the indication coming in? Seems like in the last 1 year, it is surely just moving a bit upwards, slow and steadily. It has gained as much as 47% in the last 1 year. Now, how much more upside could we see?
The stock has been slowly inching higher, as you said. It's given a breakup from what we call as a rising wedge pattern. and fresh breakouts are seen with strong volumes. The momentum indicators are also showing positivity. The stock can see another 10% upside from here, and it can even start a fresh uptrend. So, in my opinion, the stock is looking quite robust. One can add here small declines also. One can add at least for upside of 10%.
All right, moving on then, Lisa, PNB Housing, that's the counter that you're tracking for us. And why is this one in news?
Yes, it's a news on the back of results, Cheryl. And talking about their results, the net interest income was down 19% on quarter-on-quarter basis. PPOP also was down 22%, while the NIMs that contracted 95 bips on a sequential basis to 3.7%. Even the management, they guided a steady set of margin at around 3.5% and also the spreads at around 2.5%. Talking about the GNPA, that improved at 3.8% versus 4.8% last quarter. While the AUM that remained flat at 666 billion. Well, Kotak Security, they said that the guidance that is positive on the asset quality, loan growth, and also the spreads as well as the credit cost. But they remain positive about the company's growth going forward, but they have to wait to see the execution under the new leadership. So that's on PNB Housing, which is trading down 3% as we speak.
Keeping an eye out on that stock in trade. Let's move on and talk about Aptech on the charts, Gaurav. At 477 right now, do you think it's an attractive buy?
Well, it certainly is. If you look at the long-term charts, the stock is giving a 15-16-year breakout. And if it were to sustain above levels of 460, 465, then I think very strong upside from the current juncture cannot be ruled out. It will also be giving a close from continental pattern formation on weekly charts. So in all, the setup is quite interesting. One can buy it for another 10% upside from here. The stop loss for this will be around 445, and on the upside, 10 to 15% upside in a month cannot be ruled out.
All right, Harsh, TCI, that's the counter that you're tracking for us, and tell us why this one is in news today.
Well, results, Cheryl, Transport Corp. When I'm looking at revenue, it's in fact around 12% higher on a year-on-year basis. It's come in at 890 crore versus the 798 crore number same time last year. We're seeing profitability though not go up significantly, up just 1% on a year-on-year basis at 74 crore. We're looking at EBITDA, therefore, which is in fact lower, 8% lower on a year-on-year basis. It's coming at 104 crore versus the 114 crore same time last year. And margins therefore have contracted quite sharply, 2.5% contraction in margins, all standalone numbers, and what we're seeing is largely that there is some amount of margin pressure. Even on a console level, when I'm looking at margins, it's down roughly 1% on a quarter-on-quarter basis. So clearly some amount of margin pressure building in on this counter. What they are suggesting, though, they came on the channel today, and what they suggested that they're confident of achieving a 10 to 15% revenue growth even in FY24. So it's a good forward guidance, but shipping margins have been impacted. They've capitalized on last year's shipping challenges, and what they believe is that the domestic market is stronger and will continue to be so. But despite all of that, stock is down and out, 3.5% lower.
Okay, let's move on and talk about Ramco Cements on the charts. Yes, they did come out with their numbers yesterday as well, but on the charts, how is this one looking like, Gaurav?
See, this come out of a good consolidation on weekly charts. We're seeing fresh breakout sort of happening, and the stock has been outperforming as well. A small swing high breakout is also on the cards. From the current juncture, it can head towards the level of 910 to 915. At these levels, one can keep a stop loss of 785 and be long in the name.
Okay, let's move on and talk about Ramco then on the back of its numbers as well. What is coming over there? We're seeing a good move in the stock price as well. And in terms of numbers that are coming in for the company, healthy set over there, revenue seeing a good growth as well. In terms of the profits of the company, also we are seeing a steady growth coming in the profits for the company as well. Let me pull up the numbers for the EBITDA and margins and what are they doing over there. That also seems to be a decent performance coming in terms of the EBITDA of the company as well. When you look at the EBITDA of the company, that has also seen an improvement on a year-on-year basis. So keep an eye out on Ramco Cements.
All right, that is Ramco Cements for you. That is in focus on back of the earnings. Also, you got a technical view on that particular front. Next, let's put the spotlight on HDFC AMC as well as Aditya Birla Sun Life. All of them are in focus in today's trading session. HDFC AMC has dropped most in nearly 2 months. This is after SEBI's proposal that can impact the firm's earnings by about 13%, is what Jeffries had to say in a note. Like I mentioned, these stocks are falling after a proposal by SEBI to overhaul the fund management charges, spurred concerns about their profitability, and this the reason why they've gone ahead with this particular proposal. This is in a bid to improve the transparency and cut costs for the investors. SEBI is proposing that the companies include charges such as brokerage fees and taxes within the total expense limit that is already in place. Remember that mutual funds are currently allowed to charge some expenses over and above these caps, resulting in a higher total expense ratio, or TER as you know it. The TER is a measure that is calculated by dividing the total cost of funds by its total assets to arrive at a percentage amount, and the regulator proposed that the above changes and some other via consultation paper that came out yesterday. So on back of this particular development, you saw a sharp fall come in on HDFC AMC stock price, though no doubt the stock has seen a solid or a rather stellar recovery from the day's lowest point. UTI AMC also is the other counter that is in focus, as well as Aditya Birla Sun Life. So all of these counters are in focus on back of that SEBI consultation paper on TER.
Okay, let's move on to stock number 17, and Gaurav, Engineers India, that's the stock that you're going to talk to us about on the charts. What are the indications that you're picking up right now? Would we see a good run-up?
Well, the stock has come out with very strong consolidation. It has been trading in the range for the last 3 years, and we are seeing a lot of PSU stocks coming out of the range. Volume participation has been quite robust. It witnessed a breakout at 91, 92 levels. After that, for the last couple of weeks, it has again been consolidating. So keeping a stop loss of around 94, I think the current juncture, the stock looks quite interesting, and it can head towards a level of 110. So this is what is favorable. The setup is quite strong. So Engineers India should be one of the top bets among the PSU space.
All right, that's it. Take coming in on EIL, but Sumitomo Chemicals, Lisa, why is this one in focus?
On the back of results, and they delivered weak set of results on sequential basis. Revenue was down 13% and it stood at around 652 crore. Well, that was on the back of low offtake. The investor presentation is just out, and they say that the China reopening, low offtake in volumes, high inventory, that was the reasons for the low volumes as well as the demand. And also the exports was lower, but what hit the company was the domestic on the domestic front, the demand as well as the margin that was impacted. So the EBITDA, that was down 33% on quarter basis, and the EBITDA margin that stood at around 12.4% versus 16% which we saw last quarter. So in the con call, what will be highlighted is what will be the key factors to watch out for will be the growth and the margin outlook in both the domestic as well as the export outlook. And also talking about the analyst, what are they saying on the stock? 91% has a buy on the stock with a target price of around 553. So well, as we can see, the stock is down around 1.4% in today's session.
Let's move on and talk about United Spirits then, and on the back of its numbers, it's in focus. We're seeing the revenue seeing a mild bit of a decline. Very mild decline, almost flattish is what you could call it. 2,494 crores versus 2,501 crores, which was reported last year. Profits of the company, a mild growth there, 204 versus 190 crores last year as well. Other than that, in terms of the operating performance, that's seen a weakness there, and in terms of the margins, that's seen around a 350 basis point contraction. 13.5% is what United Spirits margins have come in versus when you look at it, margins last year, EBITDA margins was almost 17% last year. Let's look at, other news flow that has come in is there's a resignation coming in from Mr. John Thomas Kennedy, who is the non-executive independent director of the company as well. So keeping an eye out on this one on the back of its numbers. Today trading with gains of almost 2%.
All right, moving on, Gaurav, let's talk about Titan and how is this one looking on the charts? Do you think it will go back to its glory days once again?
I would be a little bit skeptical at this point in time. The stock was on the verge of giving a breakout, but on weekly charts, we are seeing some amount of a downfall coming in from the previous swing high levels. So as long as it is not trading above levels of 2850, there is a possibility we may see another round of profit booking happening. And the current fall that we are seeing this week, it can fall by another 3 to 5%. So in my opinion, if somebody is already bought, I would be rather advising them to book out the profits, and any rise of 2% from here can be utilized to get short positions as well. So not a major fall as such, but some amount of profit booking going forward on a very immediate term cannot be ruled out.
That's the view coming in on the jewelry retailer Titan. But Pratik Agarwal, Executive Director, Business and Investment Strategy at Motilal Oswal AMC, is positive on the premium retail segment consumption space. Let's listen into what is he liking in this space specifically and why is he so positive on it.
Very focused on premium retail. So this is a year where we are going to see a slowdown from a 15% nominal growth that we experienced in financial 23 to a 10.5% growth if you go by budget assumptions. When there is a slowdown, both on account of inflation and on account of real growth, one segment that will hold out much better is premium retailing, and we are in our choice of discretionary consumption more focused on premium retailing. And yes, there are particular segments. So this is a new format, fast fashion. Whosoever is doing it is doing a good job of it. People have understood that this is a category that sells fast. So that is the other thing that we have in the portfolios.
All right, moving on. Harsh, let's talk about GR Infra. Why is this one in the spotlight today?
Well, Rizal Sharil, you're looking at a very tempered growth when it comes to revenue. It's coming at 2461 crore, 2.5% uptick on a year-on-year basis. Let's also look at EBITDA though, because that's gone up by a solid 32% on a year-on-year basis. So basically largely aided by margins, the performance, and you're looking at margins which have gone up from 21.2% all the way to 27.2%. So 6% uptick in terms of margins on a year-on-year basis. You're seeing PAT therefore which has jumped 41% year-on-year, and you can see the impact of that on the stock as well, up 3%.
Moving on to the next one, and Gaurav, Titan was one of the retailers that you picked out. Now this is coming in on the textile side, and you picked out AB, Apparel and those apparel categories. How should we view the charts for this one? Anything different from Titan or similar patterns?
It's even worse because Titan was quite strong. It was trying to come out of the consolidation, trying to see a major breakout, almost coming towards lifetime high levels. ABFL on the other hand has been forming lower tops over bottom on the daily charts. It's now trading below the previous swing low level of 205, and as long as this level is not crossed, the stock has a possibility of touching levels of around 170. So in my opinion, this is another stock that is looking quite vulnerable and can head another 7 to 8%, even 10% lower from the current price.
All right, moving on then, let's move on to the next stock that is in focus, but we'll just Lisa, which is the next stock that you're going to talk about?
So I'm talking on Indigo, and they're not flying high today, and that is because of weak set of results. On the quarterly front, the standalone numbers, if I look at that, they reported in line set of numbers. Revenue was down 5%. EBITDA margin that was flat at around 20% versus 21% last quarter. The net profit was down 41%, and that is because of seasonality. The yields was lower, but that was offset by the higher air traffic as well as the lower fuel cost and foreign exchange gains. Talking about the passenger air traffic, that was up 5%. The passenger load factor that also stood at 84% versus 85% last quarter, and also the cost per seat that declined by 8%. Now talking about the guidance, the management has said that they expect the capacity to rise 5 to 7% in Q1 FY24. So that's Indigo trading flat in today's session.
All right, that was Indigo for you, trading flat in today's trading session. But on that note, we slip into a break on this edition of Market Fatatfat. When we come back, we will take you through more stocks. Please don't go anywhere.